Today I want to talk about married filing joint versus married filing separate. So I'm sure, in case you don't know, if you do get married during the year, even if it's on December 31st of the provided tax year, you are considered married for the entire year. So when you are married, you have two options. Option one is married filing jointly, and option two is married filing separate. This is a question that pops up very frequently amongst, I get this question a lot. Should I file joint or should I file separately? So again, if you find the information in this video helpful, please like, subscribe, and share my videos to support the channel. I'd really appreciate that. So I guess the first question comes out is I end up, some of the clients that I get that are self-prepared returns, a lot of times they file separate. And I ask the question, I said, why do you file separate? And the answer they always give me is, well, we keep our finances separate and everything is separate, so we just file separate returns. So 9 times out of 10, it makes more sense for them to file joint. And I'll usually do an analysis and show them why it makes more sense to file joint. So let's kind of get into it. Let's get into some of the issues of why. We'll talk about why you want to file joint and then why you want to file separate. So filing a joint return pretty much doubles your tax tables versus filing separate. It doubles your standard deduction. Everything essentially gets doubled. So the question is, well, if we make equal income, why would we file joint versus separate if it's going to end up at the same place? Well, you're probably right that if it's just a husband and wife, no children, no other, components to it, say both make $100,000, if you file separate versus joint, you probably really won't make a difference at all because the tax tables are exactly 50%. Your income is exactly the same. So it really won't make that much of a difference at all. But if we take that same situation and we say one spouse makes $150,000 and the other spouse makes $50,000, well, now it's going to make a difference because that spouse that makes $150,000 is able to use some of the tax tables of the $50,000 person. So pretty much what happens is you take it this way. If you file separate, your tax tables are essentially single tax tables. So as your income goes up, your tax tables are exactly 50% of a filing joint. So figuring, $150,000, without looking at tax tables, say it's going to put you in the 20% tax table. I'm just using round numbers. I'm not saying that these are actual tax tables or anything, just round numbers for argument's sakes. So we're going to say that it's going to be the 20% tax table, but your spouse is going to be in the 10% tax table because they only make $50,000. Well, if you end up filing joint, combined, you guys would be in, say, the 15% tax table instead of the 20% tax table. So you end up saving money. And a lot of times that's what ends up happening. So you're able to take some of your spouse's tax table and apply it against your higher income. So that's one situation where it'll actually end up making sense. The next item is if you have children. If you have children, you're going to have to split the children, or one person is going to take all the children. Again, not a big deal. You can easily, if you're married, if you got 2 children, one can take one, the other can take the other. So again, not too much of a big deal, and you'll still end up getting, the same credit. You'll still end up getting the child tax credit. Where there really becomes an issue is when you have dependent care expenses. So if you have a younger child that you send to daycare, or you have a child that's under the age of 13 that you send to summer camp or camp in the wintertime when they're off from school, you are able to take a deduction for that amount. And if you file separately, you will not be able to take that deduction for that amount. So again, you'll lose out on that deduction if you file separate. So that's another big area which ends up saving taxpayers money. And again, maybe won't necessarily realize until you actually go out to do it. Another area that is overlooked is the earned income credit. If you're a lower income family and husband and wife, and you're eligible and able to take the earned income credit, it is easier to take the earned income credit on a joint return versus a separate return. It is possible to take the earned income credit on a separate return. However, you have to be able to prove that you lived apart from each other during the year. And I have another video that I discussed in more detail about the earned income credit and some of the things to look out for on that one. But again, so in that particular case, so again, if you're lower income, and in that video I also talk about tax tables and whatnot. So you can go on ahead and I'll link it in the description below so you can go take a look at it. But it's just more difficult to take it because you got to basically live apart. So essentially you have to be not divorced, but separated and not living together, if you want to take that earned income credit. The other one that's another big one is tuition credit. So if you got children that are in school, or even if one of you or your spouse is in school, you're not able to take that tuition credit if you're filing separate. So that includes the American Opportunity Credit, the Lifetime Learning Credit. None of those credits are able to be taken while in school or while your child is in school if you file separate. It could be an irrelevant point because there are certain income limits on the tuition credit. So the income limits start phasing out at $160,000 AGI, and that'll be combined. So if you're married filing joint, $160,000 combined. And then if you're single, it's half of that. But again, if you're separate, you can't take the credit at all. So basically the IRS is saying, well, listen, we're considering you one household, and if you want to file separate because either one spouse doesn't work, or the other spouse makes significantly less money, we're not going to allow you to take the credit. So kind of keep that in mind. But again, like I said, if you're 160 to 180, that's when that credit starts phasing out. Joint, if you're over 180, you're not going to get anything. And again, as you get closer to that 180 mark, you're going to get less and less on that particular credit. So keep that in mind for your particular tax situation and your income limits on your tax situation as well. So overall, generally, it makes more sense to file joint, and I usually almost always suggest it. In addition, you only have to pay for one tax return. So a lot of times your tax savings, maybe you'll have a small amount of tax savings by filing joint. You're like, well, we'd really like to keep our taxes apart. I had done a return yesterday where the tax savings was about $160, and it was pretty much the example of what I gave early on in the video, whereas, husband and wife, they both pretty much make about the same amount of money, roughly. They don't have young kids. They don't have any college credits. So again, they're not going to get excluded from those credits. They don't have the earned income credit. So there's no real credit that they're losing out on or missing out on. It's just that their income is so close together that it just ends up being about the same, and the savings is so small. But if they were to file two separate returns, their tax savings would basically get eaten up by the cost of tax prep fees, as you would need to be charged for two returns instead of just a single return. So that there is a good example too of wanting to file joint, is because apologies for the sun behind me, but just because, again, you'd have to pay two tax prep fees, and regardless whether you do it yourself, you still end up with two tax prep fees, unless you would qualify for one of the free files on one of the national tax preparation softwares. So again, there's another reason particular right there to go on ahead and file jointly. So as probably you can tell by the videos that I'm a huge fan, and typically, like I said, 9 times out of 10, joint makes the most sense. And I'll typically do it for free for my, customers. I could think back a couple of years ago, there was an instance where somebody that I worked through their taxes for, there with the stimulus money that was coming out, I think it was Biden's earlier years, probably in 21 or 22, that by filing separate, they ended up getting more money. So within the rules and regulations of that stimulus amount, filing separate got them more money where ordinarily it wouldn't, and they had a young kid. So again, that was just kind of an outlier year, which is why I typically like to just kind of do the analysis quick for my clients. So another kind of a pro for hiring a tax professional versus doing it yourself. So you kind of get to know every single year, hey, this is what it is. This is what the savings is. This is, for whatever reason, if there's an outlier year where it costs you more money to file joint, although I don't typically see that where it costs more money to file joint. Like I said, that's pretty rare. Usually it's pretty much a wash. Or it's either a wash or a savings. You typically don't cost you more money to file joint. So let's kind of go quickly and see why would you want to file separate? Filing separate, again, if it was, if you just want to file separate, let's just say you literally have no savings. There's no tax savings if you file joint versus separate, and you're like, I'd really like to keep our taxes apart, rather not file them together. So we just want to file separate. So again, if you don't use it to pay a tax preparer, you use one of the free things and it doesn't cost you any extra, or it's only, a small amount of money, and you say to yourself, hey, I don't really mind paying this small amount of money to file a separate return or to file two separate returns, then by all means, go on ahead and do it. The other reason is a lot of people are on student loan repayment plans. And again, if your spouse has significantly less income, and you file a separate return, even if you're married, you can still get around those income caps if you're on an income sensitive repayment plan. So that's another reason to file separate. If there's any IRS bills due or whatnot within one of the spouses, and you kind of, like maybe somebody had back taxes that were due prior to getting married, and it's on one individual and not on a joint basis, I would say file separate for that particular case until they get that cleared up. And, there's not really, if you just like to keep your finances separate, go on ahead and file separate. But like I said, for the most part, it doesn't really make sense. And a lot of times I can kind of break it out. So even like people who like to keep their finances separate, it doesn't really take me any more time to tell them, hey, if you filed separate, your refund would be XYZ, or your balance due would be XYZ. Each spouse, this is what it would be. So this is what you would owe. This is what they would owe. So I'm able to provide that, pretty easy. So again, so each person knows, so you can put it in one account and then you can split it how you see fit. Or I don't know, like I think a lot of people like to do is take it and go on vacation, spend some time together and go on vacation together. But again, hopefully you found this video helpful. And just to sum everything up is, for the most part, especially if you have credits like children, earned income credit, tuition, student loan interest, actually I forgot that one. Student loan interest as well is going to be included in those credits. But again, that student loan interest phases out pretty early. So you may not be eligible for that either anyway. So that may not make a difference. That one's less common because, like I said, a lot of people end up phasing out, especially with the cost of living and cost of everything else of what it is today. But just kind of keep that in mind. But so again, just to sum it up, if your incomes are about the same, if you don't have a young child, if you don't have an earned income credit, if you don't have dependent care credit, it may pretty much be a wash. But again, then you have to pay extra for tax prep fees. So all things to keep in mind. So again, thanks everybody for watching. If you found this video helpful, useful, please like, subscribe. Appreciate the support of the channel.